Hello, welcome back to my network. We're on day one of Precious Metal Summit. I'm with Marshall Covell, the President and CEO of Lumina Gold. And this is a special treat because we were actually on site and many of you would have seen the site visit video. So it's quite a good time, 10 months on, to get a bit of an update as to what's happened since. So Marshall, good to see you.
Yeah, Peter, great to be here with you today. Appreciate your audience and glad to talk about Cangrejos, Gran Bestia deposit, Cangrejos deposit. Over to you.
Good. All right. Well, actually, back over to you. Why don't you just, for those potentially who didn't see the site visit video or haven't come across you before, why don't you just give us a bit of an overview and talk a little bit about the cap structure as it stands, as we normally do on the channel.
Yeah. So basically, Cangrejos is one of the largest primary gold development projects in the world. It has the potential to produce over 250,000 ounces of gold over the lifetime, and there's only a handful, maybe 30 of these companies, development companies, can do that. At the peak, we're looking at a resource of 20 million ounces of gold and 2.6 billion pounds of copper. We did a pre-feasibility study in 2023, and we're in the process now of updating that study and doing a feasibility study. The pre-feasibility study showed an NPV of about 2.2 billion at a 5% discount rate. And basically, we're taking that, the IRR was about 17% on that, and we're optimizing that. So the PFS had a 30,000 ton per day initial project with a capital cost of about $1 billion, going to 60 and then 80,000 tons per day. Part of the optimization in the feasibility study is to go to 40,000 tons per day, bring some of that gold production forward, more ounces earlier in the cash flow, and then expand probably in year 5 or so to 80,000 tons a day. So we're pretty far advanced on that feasibility study. We've done all the field work. That included infill drilling to a proven reserve for the first 3 years of the mine life, geotech drilling for mine design, pit slopes, metallurgical program, geotechnical siting of facilities, water hydrogeology program for water. So that's all done. So we're pretty much into the engineering phase, and we're looking at a sort of second quarter of 2025 completion of the feasibility study. So we're well advanced. We're into the engineering part of that. We're into the design part. We're starting to go out to vendor quotes for mechanical equipment list, electrical equipment list in a few weeks. Metallurgical drilling program or testing program is complete or fairly complete. I was in Lima last week for pilot plant testing, and we're moving forward. We're on schedule. We have the money to get through the feasibility study. Once we complete the Wheaton stream, we have a $6 million draw coming based on some conditions, and I think we're going to get there.
Good. All right, lots to unpack there.
Yeah, I know.
Right, so why don't we, so I guess to begin this story, obviously, just one caveat on the pre-feasibility study, that was at a much lower gold price.
Yeah, we used $1,650 gold and $375 copper.
Yeah. I mean, I know you did one sensitivity, which was I think at 1980.
That's a 20% up case. Yeah.
20% up case, which again, gold just completely smashed past $500 more than that at the moment. I think that was about what 3.5 billion NPV.
Yeah.
Changed the economics massively. Obviously, you can only imagine what $2,500 gold's going to do to a project like this. Since we were on site, obviously we came to site, the PFS was already out.
Yep.
First of all, an amazing site. It really is a modern exploration site. I mean, the Starlink's an amazing thing as well with the Wi-Fi up there. That was pretty cool.
Yeah.
But it seemed like you were really thick in basically what you were just saying there in terms of getting this work done. And one of the main things I was, and I think you've proved this with recent drilling results, is that there is a fairly higher grade component to Cangrejos, and maybe we can just touch on that because you announced some results recently which I was quite impressed with, from surface going down in some cases quite a large amount of meters, where you're getting around 2 grams per ton. Is this was resource confirmation drilling, but maybe we can just talk a little bit about that in terms of the grade of Cangrejos and why you're then deciding to change the feasibility and the way you're looking at this to focus on that first in the mine life or the mine plan. Yeah,
so the early years of Cangrejos, we've got probably about the first 4 years roughly, you're right around a gram equivalent gold, and the deposit starts right at the surface. What a lot of people miss about the story is they say, oh, look at the grade, but the stripping ratio is really low on the project. If you take both pits, the life of mine and the PFS, it was about 1.36 tons of waste you had to move per ton of ore. which is extremely low stripping ratio. We're optimizing that in the feasibility study, so that'll be closer to 1.1. We're doing some stockpiles and we're optimizing it. As far as the 2 gram per ton material you're talking about, that's a little bit deeper in the deposit, and it's related to potassic alteration. So oftentimes you get that alteration, you kick above 2 grams per ton and you have about 0.5% copper. So we're trying to move that versus the pre-feasibility study forward. So the current plan is to mine the Cangrejos pit. In the PFS, Gran Bestia would come in year 7. Now we're mining Cangrejos for 14 years. It'll bring some of that higher grade forward, and then we'll use the Cangrejos pit to backfill the Gran Bestia.
Right. At what point does Gran Bestia, obviously you're talking about year 14 now for Gran Bestia, but
yeah.
when we were talking to your geos on site and we were looking at the core, and you've tapped into, I think you might mention that they're quite a high grade component towards the base of the pit.
Yeah.
I mean, this thing needs to be drilled out a bit more, right?
Yeah, I mean, here's the issue. Like, from a development perspective, and we're on that path now, if we were to raise money and go and do some of that drilling work, the end of the drill bit doesn't add a lot to the story.
Not at the moment.
But
right.
You do have upside. Yeah. You're correct. Gran Bestia is open and to the northwest and to the west. We stopped drilling at the top of a ridge line, and we know there's more ounces we could add there. We go deeper in the pit with a higher cutoff grade or a lower cutoff grade. You could bring more of the resource that's below the reserve pit of the PFS into the story. So all those things we're looking at as we try to optimize this. But right now, the drilling isn't going to serve us well, but there is upside.
Okay. I'm just trying to get my head around how much of an impact. I know you can't say exactly, because obviously we've got to wait for the feasibility study to come out, but focusing on Cangrejos, going to a 40,000 ton per day to begin with, in your mind, how much will that actually change the fundamentals compared to the PFS?
So we'll get to, so on a gold equivalent basis, after ramp up the first year or so, you basically get up to about 500,000 ounces of gold equivalent per year for quite a few years. So that'll make a significant change in the first several years. So in the cash flow model, it'll bring more of that gold ounces into the cash flow, and it'll help it on an MPV basis.
And what would it do to the AISC? Because I remember the cost, even in the PFS, were quite low. It was around like $600 over maybe a bit more, but it was in the $600 range, life of mine.
Yeah.
That's extraordinarily low for a gold operation.
Yeah, that's net of byproduct copper.
Yeah.
Yeah.
So what does that do in terms of increasing throughput even further? Does that, in theory, bring costs down even more?
So most of it is in the initial capital, and then you'll start to get into AISC as primarily mining fleet additions and those sort of things, less so. And then when you do any capital improvement to the plant as you go further along.
Yeah, okay. All right, that's good. One of the other things I was going to ask you about, because it's been in a recent press release, is that you're expecting a term sheet on the exploitation contracts from the government. So you've already put down the 9 million recently, and I think there's about 6 million left to pay on that by December. Otherwise, basically, and that 6 million is only payable if you get the terms for the term sheet.
Yeah, we've been working on that, and Scott Hicks, our VP of Corporate Development, has been down negotiating with our Ecuador team, and we're getting fairly close. We've had several meetings with the government, and we're in the process of going ahead and negotiating that royalty rate. Sliding scale between 3% and 8% is what the law says in Ecuador, and we're targeting that lower end of the royalty range based on the project. So we should have that. We have to December 2nd with the Wheaton draw for that 6 million. I think we'll get there. We're pretty optimistic that we're moving in the right direction on that.
What does that mean? Say, for example, the term sheet looks good and both the Ecuadorian government and yourself sign that. How much of a big milestone is that for the company?
That's a huge one. You've got 3 major milestones to get this towards a production decision. You got to get the EIS done and get the environmental license and get the permit for the environmental. You have to produce a feasibility study. And then the royalty is part of the investment protection agreements that you sign with the government. So those 3 things are the key. And then there's other minor permits and things, but we're targeting all this to happen sort of towards the EIS towards the end of 2025, the feasibility study in the first half of 2025, and the actual environmental permit. You have to go through public hearings. Hopefully that happens so we get that at the end of 2025 and maybe early 26. And then you have an exploitation contract that you sign with the government. Now, one of the other things we're looking at, since we're fairly advanced with the project, we're in the advanced exploration phase. There's an economic evaluation phase, and then there's the exploitation phase, which is a 25-year contract. We're looking at trying to get to the 25-year exploitation contract or phase as quick as we can. So that's another thing that we're looking at.
Okay, so I did also read in one of the press releases, I think there was around a 700 million commitment that you'd need to do as part of the exploitation license that you'd have to pay on the project. Over, I think it's over like a 2-year period.
Yeah, so let me just try to unwrap that real quick. We were the first to get an exploration investment protection agreement, and that's being amended up to about $79 million from 2018 forward. Then there's the CIPA, which is the construction, and that's where the 750 roughly million, which covers the construction aspect of it, right? So that's all, that'll get you, once you have that all locked in and signed off, it'll get you the duty rates, which most of that should be zero because of the contract, the tax rate, different provisions like that. And then the final piece of that is the royalty rate.
Okay.
Yeah.
Okay, and so obviously with those commitments all there, it seems like you're pretty confident that you'll be able to make a final investment decision soon. Obviously you've got this agreement with Wheaton as well, which is a fantastic deal, 300 million already secured in financing.
Yeah.
When optimistically looking, when do you think you might be able to push the button and actually start building the thing?
So basically, we get all these line up and sort of you have the environmental permit. So between the feasibility study and that final environmental permit, we'll be looking at what we need to do for financing. And then once that environmental permit's in hand, that's when you get a production decision. Then it's about 2.5-year construction period after that.
Okay, all right, so it's all going, well, this year and next year, really. There's a lot of, okay.
Yeah.
Say we are sitting down together this time next year, what do you want to be able to tell me?
I want to tell you that we got a positive feasibility study complete, that we have an investment protection agreement with the government, and that we're well on the way to having the final environmental permit to make a production decision.
Good, all right, I'll be following along. Marshall, thank you.
All right, Peter, thanks.
Yes.